Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Wednesday, February 28th, not the last day of February. Leap year this year. My granddaughter's not too happy about that, with her birthday being on March 1st, that she's got to wait an extra day. But I don't make the rules. See, I messed up the intro now. I gotta see. My flow has been interrupted because I went off script. Let's see where we are. 5:05 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. There we go. We're back in the flow. State of the market. In an uptrend since the O'Neill follow-through days back at the beginning of November, you can see the trend gauge over here showing the coveted 4 green arrows, meaning market leaders acting bullishly and plentiful, and all 5 of the major indexes are above the 3 time frames that we track: short-term 21-day moving average, medium-term 50-day moving average, long-term 200-day moving average. So what happened today? Kind of a repeat of yesterday, tight range. No rally in the afternoon this time, just chop all day, as it seems like the market's waiting for PCE inflation data coming out in a report before the open on Thursday. Very tight range, less than 0.4%. Not a whole lot going on, but we've got some earnings after hours that we'll talk about when we get to the charts. Here are the numbers. Big 7 down 0.78%. We really need to keep an eye on Apple. Needs to hold that 180 area. If it breaks it decisively, we might be starting a pullback in the market. RG8 is our 8 growth ETF composite. Pulled back 0.6%. S&P 500 opened down 0.3, just chopped around, closed down 0.17. Slightly positive on the equal weight S&P 500. NASDAQ 100 down 0.53%, equal weight about the same. Dow down 0.6, mid-caps just barely positive. Russell 2000 small caps down 0.8%. Global 6040 down 0.18%. And GROTECTION in-house down 0.16%. Let's get to the charts. Start off with the S&P 500. I want to remind you, our flagship portfolio is named GROTECTION. Serves a dual purpose, that is growing assets in market uptrends and protecting them in market downtrends. 3 bear markets since 2018. Fourth quarter 2018, taper tantrum, COVID, and the 2022 inflation bear. 0 bear markets at Revere during those periods, losing substantially less in all 3 cases. So what we're doing is we're riding the wave since this O'Neill follow-through day. We don't ever guess how far it's going, but when it stops and it starts to roll over like it will here, our stops will take us out of the market naturally. We'll let the market make the decision for us. And then we've got a series of shorter-term technical indicators to get us back in when the market bottoms. If you're interested in this approach, by all means, reach out to us. So here is the S&P 500, and you can see this very tight pullback that stopped yesterday afternoon with a rally into the close, and now we're just going sideways. So the market is coiling for a move, and that PCE report could be the catalyst. Question is we going to break up, or are we going to break down? Really a magnificent trend going back to the beginning of November. 4 full months now, rallying to the upside with just one close, and that one close was less than 0.1% below the 21-day exponential moving average. Onto the NASDAQ 100, pulling back as well. Let's see on a 15-minute here, pulling back. Weaker today, though, so making lower lows. And Google, we've talked a little bit about that recently. That didn't help. Google down 1.8% was the worst of the big 7. Dow Jones Industrial Average just down, barely undercut and reclaimed the 8-day exponential moving average. Mid-caps basically flat on the day. This is showing up slightly, bouncing at the 8-day exponential moving average, acting pretty well, and small caps. 2 days of outperformance, give back a little bit of that today. Hasn't filled yesterday's gap, but closing below yesterday's low, however, still above the 8-day and the 21-day moving average. Those were our ultra short and short-term trend lines. How about the VIX? VIX should be moving opposite of what the market does, and it was up slightly, up 3%, with the market being lower. Holding that 50-day, rising 50-day moving average. We want it below 15. We want it below the 21-day, and it's below both of those. But ideally, you want to see the VIX lower. Lower VIX means lower volatility, tighter ranges, and that's considered generally bullish. U.S. dollar, tight range today with an upward bias, up slightly, up 0.10%. Bitcoin, we sold some of our IBIT into strength today, up 40% from entry. It just blew out the fourth ATR on our Keltner channel charts. It was like 6 ATR above the 21-day moving average. We have a rule here: don't be a pig. Bulls make money, bears make money, pigs get slaughtered. So we took half of that off today, booking that gain very nicely. I'm showing BITO, but it was actually IBIT is what we owned. I show BITO for better idea of where Bitcoin has been trading, as these new spot Bitcoin ETFs trade very much in sync with the futures ETFs. On to bonds. Tight range in bonds today. Prices to the upside, meaning yields pulling back. There's the broad bond index, TLT, the long bond, up 0.63%, meaning TYX yield down 0.7%, and the 10-year bond yield down by about 1%. That's our inter-asset correlation that we do in every video. Here's the tail of the tape. You can pause and read through this. This is basically everything you would want to know about the market. I'll hit the highlights. So Bitcoin top 60K, I talked about our offensive selling, taking profits when something is extended to the upside. We did that today. And then the PCE inflation data Thursday before the open, we'll be keeping a very close eye on that. So basically, after the one big up day last Thursday after NVIDIA's earnings, we've had 4 tight days of consolidation, coiling for a move to break out one way or the other. Now, when you consolidate as part of a trend, the consolidation should resolve in the direction of the primary trend. We're very well aware the primary trend is up. So it would meet our expectations to break higher. If it breaks lower, that's an expectations breaker, and we'll get more defensive. 21-day moving average, 36th day above, and that's 79 out of the last 80 trading days above the 21-day moving average. That's a very long streak. All-day chop today, tight ranges. No serious support or resistance broken. We did have an undercut and reclaim of this 435 support level on the NASDAQ 100. Sectors today, Bitcoin stood out, real estate stood out, not a whole lot, either to the upside or the downside. Semiconductors pulled back, oils, regional banks. XLC, that's communication services. XLK, that's tech. XLV, that's medical, pulling back. And weakness in foreign stocks, VXUS, that is foreign developed, down 0.7%, and EEM, that's emerging markets, down 1.3%. Portfolio changes, I talked about the trim in IBIT. We bought NRGU and Palantir. We'll show those charts momentarily. Summarize, mild tight session, continued consolidation. PCE data in the morning could be a make or break. So let's start out with Palantir buying this. Consolidated nicely for 5 days, poked its head above that consolidation yesterday with a reclaim of the 8-day exponential moving average and holding the 21. On the pullback today, we took a small starter position, also a small starter position on NRGU. Energy was strong early, got weak as the day went along, but still holding the 21-day moving average. That was also a starter position. After hours, some earnings and some big ones. Snow, this is a leading computer software cloud stock, down 21%. And again, a reminder, this is why we have our position size algorithms going into earnings. We don't want to lose more than 1% of the total portfolio if we own something that has an earnings blow up. and this would have been an earnings blow up. We would have trimmed it down to meet that risk management parameter, and that's why we do it. You see it all the time. Leading stocks are not guaranteed to make a move up like the way NVIDIA just did. So you protect the downside, the upside will take care of itself. So Snow is up after hours. Nutanix up slightly after hours with a pretty much a blowout report from what I saw. OKTA, a cybersecurity stock that had been on the weak side. If you look at the weekly chart here, you can see all of this overhead supply, but a great earnings report, and it's going to break out of this multiple bases it's been forming right around this 90 level, but you can see it's up near 104 after hours. So big breakout tomorrow for Okta. Let's see if that triggers through to the rest of the software stocks as we're long CrowdStrike, CRWD. So Okta's up big. AI is, guess what, an AI stock. That's up 13% after hours. So that's right near the top of this flat base that it's forming. IonQ, quantum computing, just up 2%. Duolingo up big after hours, though. DUOL, former leader, pulled all the way back to the 200-day moving average. It's up 19% after hours today. So still in this flat base, near the top of it now. All right, let's hit the portfolio very quickly. Uber, just consolidating nicely after its earnings up move, and these are in order of size in the portfolio. NVIDIA, consolidating also after its earnings move higher. I mentioned CrowdStrike, nice recovery from its gap down in sympathy with Palo Alto last week, back above the 21 and 8-day moving averages. Eli Lilly, second day of the pullback today after that future competitor VKTX announced some phase 2 data that was very positive yesterday. So that's Lilly. AMD, we bought this yesterday, mild pullback today above the 21-day moving average. Weatherford, leading oil name, had a positive bias today. Undercut reclaimed the 8-day exponential moving average up slightly. Ralph Lauren bounced off that 180, reclaiming the 8-day exponential moving average today, trying to establish itself as a leader since its earnings report. I showed Palantir, and then Square back into the high volume close. We got stopped on half of that 2 days ago, but holding on to half of what we bought on that earnings gap up that didn't work as well as it should have, but it's still alive and kicking. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. If you're interested in becoming a client, my partner Dan Stewart is at dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the market, it's how much of that you can keep. We'll see what PCE data has to say tomorrow, and then more importantly, how the market reacts to it. And with that, I'll wrap up the video for Wednesday, February 28th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.